Prediction market startup Kalshi resuming some of the betting on its platform related to elections. This follows a decision by federal appeals court on Wednesday. The court's ruling effectively lifted what was a freeze on congressional control contracts, which were prohibited by the CFTC. Joining us right now in an exclusive interview to discuss it all, Kalshi CEO Tarek Mansour. Good morning to you. Can you just take us behind the scenes of the past couple of weeks for you? And for those who have not followed this story, what's happened?
Yeah, definitely. I can take you over the past couple of weeks, but first, maybe the past couple of years. So we are Kalshi. We're a regulated exchange by the CFTC. We let people trade on any event.
Right.
We have been working on years with the CFTC to list the election market. It was banned by the CFTC, and I think we were bold enough to sue them over it. It was a very tough decision. We won in the district court early September 6th. Right. So that was amazing. It was now the first time in 100 years that election markets were legal in the United States again. It was frozen by the appeals court because the CFTC appealed, and finally, a few days ago, the appeals court lifted the stay. So today at 8:15, we are going to see the first legal trade on the U.S. election in 100 years in the United States.
And why do you think that's important?
In 2016, when we started the company, when we got the idea to start the company, I was working in Goldman Sachs, actually. Mm-hmm. And it was really interesting because when I was working on the desk, the most popular thing that people were requesting, and by people, institutions, hedge funds, high net worth individuals, etc., were election trades. They want to hedge against an election candidate, winning or not, hedge against Brexit and so on, or take a bet, speculate on it. And it was interesting. It's like we were giving them these bundles and so on. That's one. It was a proxy. Two, we were charging crazy fees, ridiculous premiums. And three, this is the thing that irked me the most, is like, well, elections impact everybody. So if you have less than a $30 million net worth, you can't walk into Goldman Sachs' lobby. So you can't get that product. And so this is really important because we're just allowing everybody to access the products the same way that large institutions can.
Of course, one of the big things that people worry about when they hear about gambling or betting on the election is the manipulation effectively of this market, and whether a group of people could get together either collectively because they're doing it with each other or just generally to try to manipulate the impression that the public could very well have about the outcome of an election. What do you think about that?
I'll respond in three parts, I think. So, yes.
But that is singularly the thing that people worry about, given when we talk about democracy and the idea of manipulating or influencing the outcome.
Yeah, absolutely. Right? I mean, I think it's one of those things where, like, so I'll start with the sort of headline answer. These concerns are totally moot. They are baseless and ill-founded. And there's three reasons for it. These markets have existed. They have existed in a number of other democracies, UK, Ireland, Australia. They have existed actually in the US. I think, Joe, you've mentioned these markets multiple times on the show, and the reason is because they're accurate. They work. They work better than polls. The polling accuracy has been decreasing over the last 10 years. So first is they have existed, and if anything, they haven't threatened elections. They've actually promoted. Now that you have a source of truth that you can quote, it's actually pretty interesting and pretty accurate. Two, every single economist, scholar, Nobel laureate, Jason Furman, who used them at the White House, that looked at the issue, submitted a comment letter in support of these markets for that very reason. It's like, one, they're not manipulable. Two, they actually promote election integrity. And three, let's actually get into the
Why
specifics.
do you say they promote election integrity?
Because they're a mechanism for truth.
Meaning what? Meaning that people look at that as opposed to polls, and that's helpful?
Well, they look at that in conjunction to polls and in conjunction to a lot of other things, right? Like in the 2016 elections, you had a number of polls that were saying Hillary Clinton had a 90% chance of winning, which was a ludicrous statement in retrospect. These markets were not going to be at 90%. They might have been at 55%, but not 90%. And so these markets, people have skin in the game, so they don't lie, whereas in polls, they can say whatever. And two, markets work. I mean, if you believe in markets, you have to believe that these work. They aggregate the wisdom of the crowds, and you get an accurate gauge and so on. I do want to respond to your specific, you outlined a very specific example, and I kind of really like that example. It's like, well, what if a group of people, aggregates, it's like, let's manipulate the odds of these markets.
Yep.
Sure. Let's assume they decide to spend, tens of millions of dollars, hundreds of millions of dollars to move the prices. Fine. They can do that. But what will happen is the price moves from 50 to 60. Mm-hmm. Arbitrageurs and traders on Wall Street will see that the prices have moved, bring it back down.
How much money would it cost to move it? You say hundreds of millions of dollars. If somebody bet I don't know, 100,000, would it move it? How liquid are these markets? How much would it take? How much?
There'll be a few million dollars of liquidity at the top of the book. I mean, you have to spend millions to move it. But the thing is, like any other market, if the fair value is 50 and you try to move it to 60, traders will bring it back to 50 immediately.
One of the things we have seen, though, over the past couple of years, and it happened in the context of short interest on GameStop, for example, or an AMC, where you've seen, call it the wisdom of crowds. I don't know if it's the wisdom of anything, but it's a group of people, maybe who aren't calling each other on the telephone and doing this secretly, but are doing it on Reddit or on Twitter or you name the social media platform, and they're deciding we're going all in this way. And they have moved the market not just for a day or two or three, but for months on end, sometimes in what you may describe as a rational way, what other people would say is completely irrational. What would happen if that were to take place, and would that be perverting democracy?
That's a great question. There's something kind of interesting about these markets. They're not as manipulable as stocks. It might be a bold statement, but there is a correct answer here. What is the price of GameStop? Can anyone here tell me? I don't really know.
I could give you a quote.
What is the probability of Trump winning this election? Somewhere between 45 and 55. It's probably not 90. And so there's an existence of what we call a fair value, a correct answer to this price. So these markets are not actually very manipulable. There is a thing that, okay, well, assume the GameStop thing happens and people start pumping up the price. There will be people on the other side disagreeing and saying, well, actually, it's still 50-50.
Where's Kalshi's not on the RCP average? Is it not? I don't think it's included in.
We're launching at 8:15.
Huh?
It's just launching today.
The market is launching today.
Okay.
Big day today.
Because Poly market's back to 50-50, and the RCP average right now today is 49.9, Harris 49.0, Trump. It's as close as
So Kalshi will be the first U.S.-based market where U.S. Americans will trade, and I think we're going to get the gauge, and we're happy to follow up on that.